Uranium prices have been depressed in recent years, and investors and industry experts have been closely watching factors that could drive prices higher. To learn more about what's ahead, INN asked uranium CEOs and executives to share their forecast and what's ahead for prices. Some pointed to recent actions from major miner Cameco as a positive indicator for prices.
Well, the good news is they've started to increase. Of course, they're up off $17 a pound. We got as high as $29 a pound early this year. They've trickled back a little bit, but with that decision out of the way, they've bounced off the bottom again, rising pretty strongly now at $24.50. And we see, as those utilities come back into the market, I think it'll take a little bit of time for those guys to come back over the next few months. And Cameco now announced in their last quarterly call last week they've got to buy 14 million pounds. So I reckon prices at the back end of this year should be significantly higher. It'd be lovely to see them jump above that $30 per pound level, because I think people have that as a psychological factor when they come to investing in the sector. So we can see that happening soon.
I think it's started to move. It's flattened out. And in the May report from Cameco, they did mention that they had satisfied a long-term contract in that period. It's not reported because it was a previous contract, but I can't see Cameco doing a contract under $50 a pound. So maybe they did, maybe they didn't, but they did a long-term contract that's not reported, and they're out there talking to their end users now to get higher prices. So I see it moving from now on.
I think so. I don't think the fundamentals for the industry have changed at all. I mean, everything that was positive before we started Section 232 has actually just got better. Inventories are falling. We've got growth in production. The one thing as well that's sitting out there is that, Cameco's guidance of what they've got to still buy for the rest of the year hasn't really changed. They've just run out of the year. So, they've got to buy the same amount of material they did at the beginning of the year, but in less time, and actually increase the amount that they've got to do. So I think that is still one of the positives that's not come through into the market yet, and we've still only got now 5 months to go, 6 months to go. So still, I think that's going to be the driver.
Others believe utilities are a key factor to watch.
Yeah, timing it, we think it's we're not talking many years from here, just because in uranium you have an existing contract booked and that is rolling off globally. So utilities don't have a lot of inventory sitting there to use to burn in their reactors. So, and you don't have total certainty, but you can guess where it sits. Some countries disclose it, like the US has 18 months, 2 years worth of inventory sitting on hand. That might sound like a lot to some people, but in uranium, where a hiccup here or there and the length of time for the fuel cycle to take uranium into a usable fuel rod and bundle into your reactor takes many, many months. So that is actually not a lot of inventory. So we think, over the next coming months, you're going to see contracts get signed. Once contracts get signed, they have to reflect the cost of mining production plus a return. We're comfortable in our assumptions and knowledge about how much it costs to extract uranium on an all-in basis. And so we know where that price will have to go to just meet that. And then from there, it will depend on negotiations and jurisdictional issues and other things.
I believe that the worst thing is more uncertainty. So if we can get this uncertainty out of there, I believe utilities will come in. They've just stopped contracting. And they've got so many pounds out there. I think we have 1 billion pounds over the next few years that are completely uncontracted. So there's this buildup. It happened in 2003 where they just stopped contracting, thinking, and then suddenly a couple of bad things happen, and boom, everything shot up really fast.
No matter what the industry has done, the supply industry, Cameco has mothballed plants. Everybody's saying, there's going to be a shortage, and nothing has changed uranium price. Whether it's 20 going to 26 or 17 going to 28, as I say to people, if I'm drowning 12 metres below the water and somehow I get to 10 metres below the water, I'm still drowning. So this is insignificant price rises. It's got to go in that sort of 40 area, and I think that breakthrough will be dominated not by supply sort of action, but by nuclear utilities saying there is a shortage. They're going to be the price makers.
Overall, the consensus is that prices have to go up in the future. Although we don't know when that will happen, there could be major benefits for uranium stocks.
But the truth is that when uranium markets move, the impacts on uranium stocks are more dramatic than any other stocks in the resource sector. As I remember, you were sort of cutting your teeth in the last uranium boom. So you have some memory of the insane share price moves we saw. I remember Paladin, 10 cents to $10. What's interesting about that is that investors' memories are still fresh. And when the uranium price does move, the anticipation that you'll see from investors crowding into the few remaining uranium stocks on the planet, I think will be very dramatic. I just can't tell you, sadly, when that will occur.
It's impossible to know the future, but overall the outlook looks bright for uranium. To learn more, make sure to check out our website or follow us on Facebook, Twitter, and LinkedIn.